What if you invest $100,000 in the 5 best Vanguard funds? Money doesn't grow on trees. It grows in mutual funds. And what better place to invest than with the largest of them all? Vanguard Funds, the world's largest asset manager, handling a whopping $8 trillion in global assets. One of their most revolutionary ideas? Index funds, which made investing accessible to everyday people like you and me, is what really makes Vanguard stand out. Index funds are all about those low expense ratios. If you are a smart investor, you will understand it by now. They're insanely small compared to other funds, which makes it possible to earn way more over the long run. And here's another cool feature: Vanguard's investor-owned structure. This means the company is owned by the funds, which are owned by the investors. So when you invest, you're basically part owner. Sounds pretty good, right? So, if you're ready to play the long game, we've got something great for you. In this video, we'll break down the 5 best Vanguard funds to invest in, using $100,000 as our starting point. We'll calculate the average return over 1, 3, and 5 years. There's a ton of valuable info coming your way that could seriously change your financial future. So stay tuned. Number 1. Vanguard 500 Index Fund, VFIAX. All right, let's get into it by starting with the oldest and largest fund on our list, the Vanguard 500 Index Fund. This fund tracks the S&P 500, which includes the biggest companies in the U.S. We're talking heavy hitters like Apple, Microsoft, and Amazon, companies that have only grown more dominant over the past 2 decades, driving the economy and changing how we live. Now, let's talk about returns. The fund has averaged around 10 to 12% per year, which is impressive given how stable these companies have been over the years. So, what does that mean for your $100,000? In 1 year, you could see your investment grow to about $110,000. After 3 years, you're looking at $133,100. And 5 years down the line, you could be sitting at roughly $162,900. Not too bad, right? Especially when you consider the safety and freedom that come with investing in such a diverse group of companies. Speaking of diversity, that's one of the key features that sets this fund apart. The S&P 500 consists of 500 different companies, each a leader in its own industry. This kind of diversity provides a level of stability that minimizes the risk of any single company going under and tanking your entire investment. Then there's the expense ratio, which is incredibly low at just 0.04%. Over the long term, keeping your expenses low like this can really add up. And finally, the minimum investment to get started is just $3,000, making it relatively accessible for most investors. Plus, with a dividend payout of around 1.15%, you're getting some nice passive income as well. Number 2. Vanguard Total Stock Market Index Fund, VTSAX. Next on our list is for those of you craving even more diversification and stability. If you think the 500 biggest companies in America just aren't enough, then the Vanguard Total Stock Market Index Fund, or VTSAX, is your go-to. Why? Because this fund doesn't just track the big guys, it tracks the whole economy. You're getting exposure to large, mid, and small cap stocks. Seriously, I'm not kidding when I say the whole economy here. Now, since it's so diversified, the growth might be a little slower, averaging about 10% annually. But think about it. Let's say you put in your $100,000. After 1 year, you're looking at $110,000. Stick around for 3 years, you're likely to have around $133,100. And after 5 years, roughly $161,100. That's almost a 50% gain on your investment, just by betting on the entire economy. Sounds like a pretty solid deal, right? Now, in terms of similarities, VTSAX is kind of like VFIAX in a few ways. For starters, they both share the same super low expense ratio of just 0.04%, which is one of the lowest in the industry. Plus, the minimum investment to get started is just $3,000, which makes it accessible to a lot of people. The dividend yield here is a little higher too, sitting at about 1.5% compared to VFIAX's 1.15%. So, if you're looking for a fund with a broad reach and steady growth, VTSAX might just be your best bet. Number 3. Vanguard Growth Index Fund, VIGAX. Next up, we've got the Vanguard Growth Index Fund, or VIGAX, which is all about large cap growth stocks. Now, I'll be honest, this one's a bit riskier, but the potential for high growth is definitely there. If you're not faint-hearted and can stomach a little volatility, VIGAX could be the fund for you. This fund tracks companies that are poised for big potential, but with that comes a bit more market swing compared to the other funds we've talked about. Historically, VIGAX has delivered around 12 to 14% annual returns. So let's break that down with a $100,000 initial investment. After 1 year, you're looking at $112,000 to $114,000. After 3 years, that could be around $141,600 to $148,700. And after 5 years, you could be sitting on a solid $180,000 or more. Sounds pretty sweet, right? But remember, with higher potential comes a bit more risk. So just keep that in mind. The minimum investment is the same as the previous funds, just $3,000 to get started. The expense ratio is still super low, only slightly higher at 0.05%, which is still one of the best in the industry. The dividend yield, though, is a little lower, with an annual payout of just 0.5%. But hey, that makes sense, since VIGAX is focused on growth rather than dividends. So if you're in it for the long haul and ready to take on some risk, VIGAX might be the one for you. Number 4. Vanguard Dividend Growth Fund, VDIGX. If you're looking for steady cash flow with minimal volatility, the Vanguard Dividend Growth Fund, VDIGX, might just be your go-to. This fund focuses on companies that have a strong track record of increasing their dividends over time. So while you won't see massive growth, you're getting more consistent cash flow. With VDIGX, you're looking at returns of about 7 to 9% annually. So that $100,000 investment could grow to around $107,000 to $109,000 in 1 year, $123,000 to $130,000 in 3 years, and potentially $142,000 to $154,000 after 5 years. Sure, not something to get excited about, but what makes up for it is the higher dividend yield, which typically ranges from 1.6% to 1.9%. That's a good chunk more than the growth focus funds we talked about earlier. VDIGX includes some big-name dividend payers like PepsiCo and Johnson & Johnson, those reliable industry giants. The expense ratio is a bit higher at 0.3%, so keep that in mind when considering your options. The last one on the list is Vanguard Real Estate Index Fund, VGSLX. Lastly, we're diving into a fund that manages real estate. Yep, real estate. The Vanguard Real Estate Index Fund gives you exposure to the real estate market without the headache of actually buying property. It tracks the performance of the MSCI US Investable Market Real Estate 25 over 50 Index, which includes stocks of publicly traded real estate investment funds, REITs, and companies involved in real estate management. This fund has averaged a steady growth of around 7 to 9%. So, if you invested $100,000, after 1 year, you'd likely have around $107,000 to $109,000. Fast forward 3 years, and that can grow to $122,500 to $128,500. Stick around for 5 years, and you might be looking at $140,300 to $153,900. Now, while the growth may not be as flashy as other funds, it's real estate, arguably one of the most reliable investments out there. Plus, the dividend payout is pretty attractive, sitting at around 2.5% to 3%, which is great for income-seeking investors. One thing to keep in mind, though, is the expense ratio. At 0.12%, it's not the lowest, but for a real estate fund, it's still pretty reasonable. So there you have it, the top 5 Vanguard funds to consider if you're thinking about putting your $100,000 to work. Whether you're looking for steady growth, high dividend payouts, or diversification across the whole economy, there's something here for every type of investor. Now, keep in mind that while these funds offer great long-term potential, none of them are a get-rich-quick scheme. Investing requires patience, discipline, and a clear focus on your financial goals. Whether you choose to invest in the broad market with VGSLX, go for growth with VIGAX, or play it safe with dividend-focused funds like VDIGX, the key is staying the course and letting your money grow over time. Thanks for sticking around. Hopefully, this gave you some valuable insight into building your financial future. If you like this video, don't forget to like and subscribe for more investment tips and strategies.